So good morning, good afternoon, good evening, anywhere you may be all over the world. We are here again to bring you a very important video, enlightenment about your business, your companies, and whatever enterprise that you are doing. My name is Oluwatosin Maja. I'm a chartered accountant and I'm the managing partner of TOSJOHN Consulting. So today, as you can see, we are bringing you capital allowance and company income tax computation in Nigeria. So what is capital allowance? So we are bringing you this video to enlighten you, to bring your awareness into all this information that is necessary for your business. In the previous video that we've been bringing to you, we've been letting you know about different businesses and their tax compliances. If you are into sole proprietorship, that's business names. So if you are registered as business name, what are your tax obligations? And if you are registered as a limited liability company, what are your tax obligations? And we also let you know that NGO, even though they are not meant to pay tax, but that does not exempt them from filing. They may be exempted from tax, but they are not exempted from filing, meaning that every business organization must have their tax identification number to be able to file all their taxes. Either they are paying tax or they are being exempted from tax because of some certain threshold, yes, or because of the law regulating that particular business, like NGO, like churches, NGO at all, right? They are not meant to pay tax, but they will register for tax, prepare their accounts, and then file all their taxes within the time frame before deadline. So, and we've also given you a breakdown of comparing business name taxes against the company taxes. And we said from next year, in the new tax law, like the NTA, Nigerian Tax Act, starting effectively next year, it is more advisable, it is more beneficial, it is more advantageous for companies that are registered in terms of tax benefits than business name, because business name taxes will be taxed on the individual business owner. It will be all their business transaction, everything will be taxed on that individual. While for company which enjoy a legal entity, will be taxed on the company. And for this video we are bringing to you, capital allowances, it is majorly for company, those that are registered as limited liability company. So let's go ahead and see what we have for you in this video. So capital allowance and company income tax, that's CIT. How does the computation look like under the Company Income Tax Act, that's CITA Cap C21 LFN 2024 as amended? But all these taxes have already been brought into one tax act, which is the NTA, that will be taking effect next year, right? We'll be giving you a summary of all the four tax laws that have been amended as one: the Nigerian Revenue Service, the Nigerian Tax Act, the Joint Tax Board, and the Nigerian Tax Administration, the Administrative Acts that govern it. Will be bringing you the summary of the four, which have already been brought into one place to remove all this burden of double taxation and the complexity in the tax law. Let's go ahead. So what is capital allowance. Capital allowance. Capital allowance is a tax relief granted on qualifying capital expenditure, such as plants and machinery, motor vehicles, buildings, equipment, and all other assets that are capital qualifying in nature. So they are given instead of claiming depreciation that we accountants will normally do. We do depreciation on non-current assets, which we usually call fixed assets. We call it non-current assets. So we do depreciation on them, right? So this depreciation is not allowed with tax. Tax don't allow depreciation. So that's why they are giving capital allowance instead of depreciation, which we calculate, the accountant calculates, right? But the tax does not allow that. That's why they are giving capital allowance instead of that. So under the Nigerian tax laws, capital allowance is given to reduce taxable profits. So if you are using qualifying capital expenditure, right, business, you will be giving capital allowance to reduce your taxable profits, just like we just said now. So these capital allowances, it has rates. So example is for plant and machinery, there's what we call under capital allowance on those non-current assets. We have what we call initial allowance and we have annual allowance that are given for those qualifying capital expenditure. But from next year, initial allowance has been removed from the Nigerian Tax Act. It has been removed. So initial allowance will no longer be in place, will no longer be in use in calculation for CIT from next year. So we are giving you all this clarification to ensure that you are prepared and you are aware of all your tax obligations from next year. But of course, for this 2025, still be able to enjoy initial allowance and annual allowance. But for next year, it's only annual allowance that company will be able to enjoy to reduce all their taxable profits on their company income tax. So you can see the breakdown under this table in this presentation for motor vehicles, for furniture and fitting, for building, industrial, for computer IT and equipment. You've seen the initial allowance and the annual allowance. Let's go ahead. Then company income tax computation format. This computation for company income tax, right, we need to be in the audited account, meaning that it is only a chartered accountant that can certify and sign this audited account, meaning that we are here to help you. That's why we are bringing you all this awareness. We are an audit firm, accounting firm, and a consulting firm as well. We help companies to prepare this audited accounts, right, based on the laws, right? And it is good to start your tax planning, right, when your business is starting from the foundation. Not that when you have issues and problems and difficulties and complexity and the tax people are now running after you, that's where you are now thinking of audit firm, accounting firm to help you. But when your business is just registered afresh, you can reach out to us. We help you with your tax planning. We give you all the information that you need to enable you to be tax compliant and to reduce your tax liability based on the law. Based on law, because tax evasion is illegal, while tax avoidance is legal. Tax planning is legal, provided it is within the laws. So we work based on the tax laws to help you reduce all your tax liability, and we enlighten you, we make it clear to you. So let's go ahead. Company income tax computation. So you see profit before tax from the financial statements. So you cannot just come and do capital allowance, company income tax computation, if you have not prepared your financial statement. So when you bring in your profit before tax into this place, then you add back your disallowable expenses. There are some expenses that are disallowed, like depreciation is not allowed. That's why they are giving capital allowance. Donations not given to the appropriate body will not be allowed for deduction, for tax deduction. So if it is not from the schedule that FRS and the tax law have given, it will not be allowed. So any disallowable expenses will be added back to the profit before tax from the financial statement. Then you will now less non-taxable income. There are some non-taxable income which will be deducted if at all there is any in your financial report, in your account, in your business transaction. Then at the end of the day, we have adjusted profits. So when we do all of this, we have what we call adjusted profits. So from the adjusted profits, we now less capital allowance. There's a table for the capital allowance, which we are going to still show you. So there's a table. You don't just have a figure, just manufacture a figure of capital allowance. There will be a table, just like we've shown you on the capital allowance table. So there's a table for it to arrive at the capital allowance to reduce the taxable income. So at the end of the day, we have the total profits when your capital allowance has been deducted from the adjusted profits. Then you now apply the company income tax rate. Like we said, in this current tax law, the exemption of tax for a company is 25 million. So if you have 0 to 25 million, you are tax exempted. But you will file. We have to clarify this. You are going to file, but you will not pay tax. So how do we know that you are exempted if you have not prepared your accounts? If your account have not been prepared by a chartered accountant, that's why we are here to help you. You have to prepare your audited accounts before we can say you are exempted, right? So any company that has a turnover of 25 million and below is exempted from company income tax. But remember, you are exempted from company income tax, but there's what we call education tax, which is on adjusted or accessible profits, and that is 3% of accessible profit, even though you are not going to be paying company income tax, right? So we have to clarify this to you. Then if your turnover, that is all your sales, your revenue, is between 25 million to 100 million, is 20% company income tax in addition to your education tax. And then what we have police fund, and that one is just 0.05%, which is very minimal. Then if your turnover is 100 million and above, your income, your sales, your revenue, that is 30% in addition to education tax. But then you would have reduced your taxable profits from your capital allowance. But all this capital allowance, which is from your qualifying capital expenditure, must be used for the business, not personal use, for the business. And what we call wholly, reasonably, exclusively, and necessarily before have been reduced to only wholly and exclusively. So it must be wholly and exclusively from next year, from the Nigerian Tax Act, before it can be allowed to reduce your taxable profit. That's the capital allowance. So for instance, we have an example taking that your profit before tax is 100 million. Your depreciation is charged as 2 million, which is disallowed. Capital allowance as calculated from the table based on your qualifying capital expenditure is 4.5 million. This is how the company income tax is going to look like. You have your profit before tax, which is 100 million, 10 million rather. Then you add back your depreciation, which is 2 million. Then your adjusted profit is going to be 12 million. That's 10 million plus 2 million. Then the capital allowance as given, 4.5 million. You less it from the adjusted profits or accessible profits. You get your taxable profit, which is 7.5 million. So at the end of the day, from your company income tax at 30%, you have 2 million. That's 2.2 million or 2.3 million approximately. So that's what your company income tax is going to look like. But imagine you are doing this for personal income. It will be a whole lot. So that's why we advise, if your business is doing so well, upgrade it to limited liability company. We are ready. We are here to help you. You can reach out to us. So the summary of everything we are saying is that capital allowance reduces your taxable profits, which replaces depreciation. Then adjusted profits is a business profit, right, that you arrive at when you add back the depreciation that is disallowed under tax, which has already been given for capital allowance in place of capital allowance. Then we told you that income tax rate ranges from 0% if your turnover is 0 to 25 million. If your turnover is from 25 million to 100 million, that's 20%. And if your turnover is 100 million and above, your company income tax rate is 30%. So we are TOSJOHN Consulting, and we are your business reliable, business trusted partner. You can reach out to us. We are an audit firm, accounting firm. So we help you with all your tax compliances, with all your accounting record, because you cannot prepare tax if you don't have accounting record. So you can reach out to us. We can help you implement accounting software to automate all your business record, and we help in preparing audited accounts. We can serve as your tax consultant, your external auditor. We are your trusted business support partner. Feel free to reach out to us. Like, subscribe, share, and comment on our YouTube channel. Refer us to people that need all our professional services, and we'll be glad to hear from you, to help you, to partner with you, and take your business to the next level and be compliant with law. I am Oluwatosimaja. I'm a chartered accountant, and I'm rooting for your business. Until we meet again in another video, have a blessed day. Thank you.